Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today is Sunday, so you know what that means. It's time to go around the net with all the news you can use in the week that was in credit and finance. So we have a little bit of a themed docket for you this Sunday. We're going to talk about 3 different stories. And you see, I've been working in banking for quite some time, many years, and I always have maybe 3 tenets when someone asks me how was the day. This is how I grade it. Did I get fired? Did we lose a boatload of money? And most importantly, did we get walked out by dudes in windbreakers? If I can say no to all those things, then it's been a pretty good day. Well, these stories we're going to talk about violate all these principles, or they will likely soon violate all these principles. So we're going to touch on the Visa story, we're going to touch on Equifax, and of course we're going to touch on U.S. banks. So of course, if that sounds interesting to you, go ahead, get your attorney and your retainer set up, press the subscribe button, and let's get to work. Now, we are going to lead off with Visa. Of course, Visa being one of the main payment networks between Visa, MasterCard, Discover, and American Express. And what they do, of course, is they help facilitate payments between merchants, and then the banks kind of be playing the middleman or intermediary, if you will. Well, Visa was recently trying to get out of a lawsuit that they've been targeted and become a part of that was aimed initially at a company called MindGeek. Now, if you're unfamiliar with MindGeek is as a company, well, MindGeek's actually the company behind Pornhub, and I'm pretty sure we know what that one is. So what's going on here? Let's take a look at this, and we'll get to some judge quotes here. Again, this lawsuit targeted at MindGeek is basically saying, hey, look, there's been, illegal, they call them illegal images. Really what they're talking about is child pornography on Pornhub's site, and not like 2 or 3. They're like, hey, there's a lot of it, right? So the lawsuit is obviously going after MindGeek, the company behind Pornhub, who will be hosting these images. Now, where Visa comes into play is because Visa is facilitating the payments, because apparently people are still paying for this stuff for some reason. They're technically could be a part of it. So Visa, of course, wanted to get removed from this lawsuit, as anyone would. So the judge came back and said, hey, they're denying Visa's claim to be removed from the lawsuit. So here's the quote. If Visa was aware that there was substantial amount of child porn on MindGeek sites, which the court must accept as true at this stage of the proceedings, then it was aware that it was processing the monetization of child porn, moving money from advertisers to MindGeek for advertisements playing alongside child porn, like the plaintiff's videos. And this is a really interesting story because this is kind of more or less how we end up with all the know your customer rules in banking, right? So banks will always ask you for all this information, and banks will even pop up the things as, hey, the reason we ask is for the government, right? Because the government basically says, hey, it's now your responsibility, banks, to know the businesses that your customers are involved in. That's why a lot of banks simply turn away things like the gaming business, like marijuana business, like cash advance, ATM. Like that's why you get all those questions when you sign up for bank accounts and cards and things like that, right? So, for years, because a lot of times when I tell you, like, banks don't really care what you do. Like, there's a golden rule: never ask where the money came from. So this is, in the lawsuit, they're trying to enforce, like, hey, you might have known, but we really need to figure out, did you actually know? Were you, and I'm going to say, an accomplice in this or not? So, this has come up before. How much responsibility does an intermediary have to understand the actual business of its, of its partners or its vendors? So, this could be, I wouldn't know if I say it's like set a precedent, perhaps, because again, this isn't the first time this has come up, but this is still an interesting story to follow, because a lot of times these companies just claim, look at me, I don't know. I just move the money from one place to another. That's kind of what I do. But of course, government takes another stance. It's like, hey, we can't be everywhere, so we need to, make you accountable as well. And so we'll definitely see how this one plays out. Now, this overall just not being removed from the lawsuit isn't necessarily surprising. Of course, Visa asked to be removed from it, and of course, the judge said no, because we've got to go through the process. So I wouldn't necessarily they're guilty at this point, right? But we're definitely going to keep an eye on it. So that's number one. Now we're going to move to everyone's favorite credit agency, Equifax. So you may remember Equifax from back in the day with the massive data breach. Many of us were affected. I was affected. It was like millions and millions of people. Well, now they're kind of back at it, but at a much smaller scale. So this time around, somewhere mid this summer, Equifax was actually sending wrong credit scores to lenders on borrowers' behalf. So if you take a look at it, what they were doing is, I believe it was like the wrong scores for about millions of prospective borrowers, right? Now, at the worst case, the score differential looks like it was around 25 points for about 300,000 borrowers. That looks like the most severely impacted population. So that what Equifax is saying is, hey, there was an issue due to a coding change on a specific server that, kind of messed this up. Now, Equifax did not provide a date range. However, Freddie Mac is, about one of the government entities, GSEs, who buy a lot of mortgages. They received a notification alert from Equifax about this, and the ranges were from March to April, so that's kind of why we're landing in spring. But we don't know for sure the full date range. Of course, they also said, Equifax said there was no shift in the vast majority of scores and that credit reports were not affected. So the underlying credit report information, right? Because it's your credit score is the number, and your credit report is all the open accounts and account history you have, right? So, overall, on one hand, yes, if you worked in tech, you understand that issues happen. The technology team didn't, I wouldn't believe, intentionally go in and screw up a server to do this. So that definitely could have affected a lot of people, especially in that 25-point range. Because, if you're at a 300 and you drop to a 775, really not, or I'm sorry, if you're at an 800 and drop to a 775, not that big of a deal. But, 25 points, if you're, 700 and it drops you to a 675, like that is a big deal. That can affect your mortgage rate. So, I'm not going to crush Equifax for this. It was definitely not a good look. And, I think these ones are the most serious because we don't get to choose which credit agencies we work with, right? Your information just has to go through them. And even if you could opt out, what would that life look like, right? So I would have liked more details on what they plan to do to rectify this, right? Because if you're talking about mortgage rates and stuff and denials, then your mortgage rate, if you got a worse rate, it's still a fixed rate and locked in. So I believe they should be on the hook to go through and do the legwork between the lender and then just get back to the bar and work out something, right? It's pretty hard to say, hey, I'm going to adjust your rate because we've sold that loan already. So kind of like, what do you do with that? But I think that would be the appropriate way to go to reach out to those affected people and make it right. If you were denied because of this, remove that hard pull from your credit report. Remove that denial, that would be the best way to go. So they could still make it right. I just haven't seen a lot of information about this. It's entirely possible they're just saving that for the people who were affected, but I gotta imagine they had a decent plan like that. They'd want everyone to know how good they are. Now with that, our final story is the one that people wanted to talk about the most, and that is U.S. Bank, right? So a lot of folks sent this to me last week, and I apologize. I missed deadline. I couldn't get to it in the last recap, so we're covering it now. And that is U.S. Bank, who's basically found guilty by the CFPB, Consumer Financial Protection Bureau, of doing the same exact thing Wells Fargo did a few years ago. Maybe, 7, 10 years now. It's been quite some time. And they've been fined a boatload of money by the CFPB, about $37.5 million. So let's take a look at this. We're pulling out some quotes from the CFPB report. I can link the full thing down below if you want to go through it. But here we have it. These are the violations. So the CFPB is saying, hey, found the U.S. Bank violated Consumer Financial Protection Act, the Fair Credit Reporting Act, Truth in Lending Act, and the Truth in Savings Act. Specifically, U.S. Bank was doing these three things. So that right there is like every act we have almost to protect people from financial institutions. So not off to a great start. So exploiting personal data without authorization. Now, opening accounts without consumer permissions. U.S. Bank opened deposit accounts, credit cards, and lines of credit without permission. This includes opening reverse and premier lines of credit which carry high interest rates and expensive fees. This behavior violated Consumer Financial Protection Act and Truth in Lending Act. Now, failing to provide legally required consumer disclosures. Now, of course, you did this one because you opened the accounts without them knowing, so you probably don't want to disclose it. So there you have it. We're going to get to the punishment in a second, but that is pretty much what Wells Fargo was doing, right? Now, this also looks like the report goes on to say, hey, it's been going on for about a decade, believe it or not, which is insane in its own right. And then number two, it looks like it's the same exact root cause that, hey, there was unrealistic sales goals, a lot of pressure put on employees to hit them, and that's why they resorted to this. Now, that's not necessarily an excuse, right? This is almost worse in my opinion because one, it went on for a decade. Number two, you saw what happened to Wells Fargo. If you're in banking, you've talked about it. Trust me, we've all talked about it. There was a Netflix special about it. I think it's called Dirty Money. You should definitely go check it out. It's 30, 45 minutes maybe. It's a good watch. Basically, one of the young ladies who works in a branch, I believe it was, she sat down and kind of did the math off of census, and it was like, hey, your sales goal for our little area here, we would actually run out of new customers if we were to hit this goal in 3 months' time or something like that. So that's what makes it, so bad. Now let's talk about what's happening, as far as punishment. We mentioned the $37 million fine, but what else? So enforcement here. Under the Consumer Financial Protection Act, CFPB has the authority to take action against institutions violating consumer financial protection laws, including engaging in unfair, deceptive, or abusive acts or practices. So that checks all the boxes. So first one, pay a $37.5 million fine. U.S. Bank will pay $37.5 million penalties to the CFPB, and CFPB will deposit it into the Victim Relief Fund. The funds provide compensation to consumers harmed by violations federal consumer financial protection laws. Forfeit and return all unlawfully charged fees and costs to harmed customers. U.S. Bank must develop a plan to remediate harmed customers by returning all unlawfully charged fees, costs, plus interest. Now, in fairness, the CFPB article does just talk about the fine. So if you look around a little bit, like this compliance site here, it does say that this U.S. Bank thing's been ongoing since, I believe, 2015, 2016. And it was the worst in 2016. So they did try to put some measures in place that saw like a downturn in fraudulent accounts open. But overall, the date range looks like it's from 2015 to 2021. So that, again, kind of makes it worse. Again, that it went on for quite some time. They did put measures in place saying, hey, you know, bankers will only be paid if customers use the accounts versus just having the accounts open, but still it went on for quite some time. You know, honestly, I don't know if these actions go far enough, though. I'm not going to pretend to be an expert in how they calculate out this large sum of money, but again, U.S. Bank's like the 5th largest bank, right? Also, I feel like we were much harder on Wells Fargo when this happened, right? So part of this story is kind of like, how are you supposed to feel? Because I have Wells Fargo, I have U.S. Bank accounts. If you don't know, I open a lot of bank accounts and I churn them for the bonuses, but I also have the Triple Cash, the Cash Plus card, and plans to get the Altitude Go card. And I kind of thought about it, like even knowing this, having read this, would I not get the Altitude Go eventually? Well, the answer is no. I'm probably still going to. And so I come to the conclusion, like, yes, this is terrible stuff, and it's easier to be less mad when you're not directly affected, but we've just kind of become desensitized to this, in my opinion. I haven't actually seen this really grab me many headlines anywhere. Like, it's been on CNN, and again, folks have sent it to me to look at, but overall, I think the more concerning thing is society's reaction to this, honestly, to all 3 of these stories, actually, and just how desensitized we've become to it, right? But then the question becomes, like, well, what are you reasonably supposed to do, right? Could you name a bank out there that you do trust? It's like, well, no, not really. I mean, I like Chase, but do I trust Chase? I mean, you know, beyond the FDIC insurance, I guess there's a reasonable level of trust there that you don't expect this to happen. But again, we've seen it with the 3rd largest bank, 2nd and 3rd at Wells Fargo, now the 5th at U.S. Bank. So that kind of makes it tough overall. But yeah, I think for the 5th largest bank, you would have expected the fine to be at least $1 billion or something like that, something meaningful that hurt, right? I'm really interested to hear your thoughts on this U.S. Bank one more than anything else. I thought long and hard about it, and the conclusion I came to is we just all seem pretty desensitized to it. Maybe it's because we churn so many accounts and we open so many accounts, and I imagine they're probably more so targeting folks that have dormant accounts or aren't nearly as active, perhaps. I'm not really sure how they took it or which people they targeted to do this for, but just like overall we still am a little bit desensitized, and while the CFPB yes did their job, 10 years is a long time, and I don't know that money 37 just seems light in my opinion, right? It doesn't seem like it's going to pack a punch in my opinion. So overall, love to hear your thoughts on that. But anyways, guys, that's been it for your Sunday recap. So of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, of course, consider subscribing to the channel. Again, posting content just like this every Monday, Wednesday, and Friday. Of course, right back here every Sunday with all the news you can use in the week that was in credit and finance. Again, you know the question down below. Sound off on the U.S. Bank story especially, but if you've seen some other stories and want to talk about the other ones, love to get your thoughts on all of it. Anyways, guys, that's going to do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.